A highlight for today is an interesting one because it's another one of those. It's okay to be wrong, but where are you wrong at? And how do you know that before it's way too late? It's easy to be wrong that the market is okay, it's bearish. I think it's going to go down. And you think that in here, and then you say, oh, I was wrong up there. Way too late. The funeral's already over. So damage is done. You have to be wrong sooner rather than later. And so there was a moment, it was right in here where we peaked and rejected quickly going down from one circle to the next. When I say peak inside this circle, if we were to blow it up, it just market goes up and it comes down quick and it relieves or leaves a rejection. So generally this sell-off, which is from that top rectangle to this rectangle, gets respected. And when I say that, it means like 50% of it, generally not much more than that, will get retraced, which is this guy in here. And then they'll have some sort of continuation to the downside. So when a move lower gets respected, it means it kind of looks like that. All right. Now, what's interesting though is when it's taking time at that 50% area, you have to start scratching your head quick and saying, be careful because it's not doing this, meaning it's not coming off. And this is exactly what we got in here, where that's about 50% of this move from there to there. And then wham, they took out the top. You can't wait till up here to say this move is still being respected. It's just going, a little further than I thought. You got to question it as it gets fast in here. And that's what we did. You can't wait. You got to be careful. Like, be careful still thinking it's going to do this because it's not doing this. And that's the point about being wrong isn't great. It isn't something that you need to love to have happen to you, but you got to be good at it. You got to be good at reacting and knowing when you're wrong so you're not stubborn. Stubborn people who are wrong are generally those that always are fighting with themselves, with their spouses, with everybody. Why? Because they have a closed mind. So when that's fine. Do that and get away with it in other businesses. But in the business of trading, you're not going to have much success if you're not good at being wrong, admitting it, or at least putting it on the map, putting on the chart, where am I wrong at? So in this case, you're wrong if it starts getting above 50% of this retracement. And if it gets a little bit above 50% and goes down, fine. Who cares? But you got to know where you're wrong at before you're making ideas and predictions and things like that. So back over here, same thing happens. The other thing that it'll help you do is it won't keep you from making the next opinion when the same kind of probability pattern set up. Over here on the right side, this circle to this circle, right? That's a move that should be respected. And it was. And that's what we were able to say as it happened, instead of when you are just way wrong every time you're wrong, you're going to be less likely to want to have another opinion, to want to execute that opinion, because you're going to have the muscle memory of getting your face ripped off every time you have an opinion. So you're not going to talk a lot. You're not going to raise your hand a lot in the classroom. If every time you're wrong, the teacher cracks you over the head with the pointer, you're not going to raise your hand as much. So you have to be willing to be wrong, and you have to be willing to take shots. And if you're willing to know where you're wrong so you don't get killed every time you're wrong, you'll be more likely to raise your hand and execute opinions, because it's okay to be wrong. You're supposed to be wrong. This is one of the few industries where you get rewarded for being wrong if you're good at it.